Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at the dollar and then gold, know the mic sounds a little bit different using a backup for the short term. So when we did the video yesterday, we were talking about how it was a bit of a role reversal where we were starting to see some bear flag patterns on the dollar, and then after the video, a couple more played out. And we see further pullback, an oversold bounce is underway. Bulls are trying to establish a higher low and then break to a higher high to turn around this consolidation. But as of right now, the bears are in control of the short term until we see a break of 103.09. And ideally for the bulls, they'd be a lot more comfortable with a break of 103.28. Key support is 102.77, and then the low of the initial consolidation, which was that previous bull flag, and that was down at 102.52. So those are the key levels to be watching. The bulls need to maintain higher lows, but they are still pulling back, and we can draw a downtrend resistance line where these lower highs are hitting on the hourly and see if the bulls are able to get above those levels. And actually we are right now. So that steep of a downtrend line doesn't really give us much information because we need to see the bulls break the lower high pattern in order for them to turn things around. So the daily time frame did confirm the bearish reversal inverted hammer. So a long upper wick of profit taking, a red day confirming it. But we can see the bulls buying the dip, and it is just another higher low unless we see a break of 102.52 support. Then we break the higher low pattern. So the dollar is still in control. Let's look at it from one last time frame here, the 4 hour. So certainly another higher low. Need to turn things around and see another bullish MACD cross here for the bulls to maintain strong. Could also be a potential bearish head and shoulders pattern. That's a little bit way too early for when I would like to start looking for one. That would be the left shoulder, the head. I usually don't start looking for bearish reversal head and shoulders patterns until we see the right shoulder coming down. So not only forming the right shoulder, but also coming back down to test the neckline of support, which in this instance would be 102.77. So I'll keep an eye on it, but wouldn't put too much weight into that pattern at this point. All about the hourly lower high, lower low pattern since the top. And we look at gold, and it's not really doing what you would anticipate it to do. And it's just struggling. It's struggling really hard. We do have a higher low where I put a horizontal support line there, and that's down at 1125.67. And we've got a little double top at 1142.20 with key resistance. And we're trading within this channel now for days. So I'm going to continue watching this channel. We also have another little double top. We could put another resistance line here because we topped out at 1137 and 1136.93. So another little double top on a bounce attempt, and have to see the bulls break these levels in order to turn this trend around. The hourly, I should say the daily time frame, still weak. We do have the higher low. We are nowhere near forming a higher high. We are on the verge of a bullish MACD cross. 10-day moving average resistance, I keep talking about that level. It's now just at 1140. Has to become support. It has been resistance since back on November 4th. So now 6 weeks of resistance, and in that 6 weeks, we've seen 3, 4, 5, 6, 7, 8, 9, 10, 11 rejections. No closes above that level. Must close above it for the bulls to be looking for some upside, and that would come with a break above that double top of 1142. So let's check in how the miners did. NUGT, we know the bulls are struggling. They saw a little follow through, a little higher low and a higher high. Certainly not a strong move. And we can see we do have a base of support being built, but the bulls have to see a break of 629 in order to be looking to fill this gap at 690. So still just trading sideways, not really seeing any momentum to the upside. We know JNUG is a little bit weaker, and we can see the close at the low of the day on JNUG, not as weak a close on NUGT. Not confirming the bullish reversal candlestick. That's what stands out number one here on JNUG. Bears still in control. Checking in on the bears. They're looking great. They are forming a bullish candlestick today. Low volume, but low volume across the market. Upper Bollinger Band resistance, recent high is resistance, and the bulls would love for the low of today to be a new higher low established. 51.55 for JDST, and on dusk the bulls would love for that level to be 64.95. A higher low, and then we can see if the bulls will get some higher highs, but obviously that would require gold likely breaking down to lower lows as well. So still watching gold and the dollar very closely to see how it plays out, but the short term favoring the gold bulls in the sense that the dollar is seeing weakness, but we're not seeing that translate into the kind of strength in gold that the bulls would hope. So still weakness, even though the dollar is seeing some weakness as well. So I'm just going to compare the dollar where we were. 12.20 at 10 a.m. was the low, and 12.20, 10 a.m. we had already started pulling back in the dollar when gold hit the low. And this would mean that gold should have seen, if it was a direct correlation, gold would have seen its high at 12.21 at 9. And where were we at 12.21 at 9? There was that double top. So it does make sense. It's just weakness. So we'll see how it plays out. A couple resistance levels to watch. See you tomorrow.